Welcome to Share Talk, the only podcast where investors come first.
Hello and welcome to Share Talk. I'm Charlie Gibson, and joining me now is the CEO of ADM Energy, Okhomina. Osa, a very good afternoon to you. Thank you very much indeed for joining us.
Thank you.
Just tell us to begin with, would you? Just give us a flavour of what ADM is all about.
ADM is a small oil-producing company with our primary assets offshore West Africa and Nigeria. And we're currently producing roughly 300 barrels a day net production to us. And we have roughly, about 16 million barrels of oil equivalent P1, P2.
And what, from the perspective of investors, what makes it an exciting investment opportunity?
I've recently taken over as the CEO about 9 months ago, and we've spent a great deal of time restructuring the company, brought a new board of directors who are industry experts. I myself have been in this business for 20 years or so. I've done many, many transactions in West Africa. Our chairman, Peter Francis, an ex-ExxonMobil Shell man, who's been involved in financing mega projects in West Africa as well. So we're a producing company, which means that we're not going to fall away. And we have revenue, we have bookable reserves P1 and P2, and we have a veritable pipeline of opportunities that we plan to implement over the coming years. So we're a stable stock with a well-proven management team with a clear agenda.
Tell us a little bit about those opportunities. I think we probably take it for granted that the offshore Nigeria is prospective for oil. You and your colleagues on the board are clearly dyed-in-the-wool oil men, if that's not an oxymoron. But tell us about those opportunities.
What we're doing right now is, and we announced in February, we're consolidating our position in our current field. So we're increasing our position from 5% to as much as we can buy. And then once we've achieved that, we start a phase of development, which will be anchored by our partner, Trafigura. So in the next 12 months or so, our main focus is to bed down an increase in interest in the assets, and then take the asset into the next phase of development, which will see production through, at the very least, once we go into the gas development a few years after. So we're pretty busy in terms of our development agenda.
Developing offshore oil, not a cheap process in the scheme of things, but by which I mean tens of millions, hundreds of millions of US dollars. Yes. Tell us a little bit about the financing and how you expect to achieve that, and I suppose importantly, will you need to come back to equity markets in order to put up your share of financing?
Yeah, I mean, good question, on the development side, we're producing, which is a good start, which means that we're not seen as by bankers and investors, or if you like, debt providers, as having exploration or geological risk. Most of the financing will be done through a mixture of offtake financing, which we hope to get from Trafigura, and box standard bank debt. Our region is well financed in this respect. There are lots of trading companies scrambling around to look for development assets like ours, which are fighting for expansion. So we're not too worried. We've done this many times, myself and Mr. Francis. We're not too worried about the financing for the development. And a bulk of that, I would even go as far as saying 90% of the money is needed, will come from debt financing from our syndicate of banks and the traders, and the equity portion should be quite small.
There is, we speak of crude oil as just crude oil, but of course there are light crude oils, there are heavy crude oils. What sort of crude oils are you looking for?
Okay, our current production, our current resource base is very light oil. We have, for the 60 API, which is the equivalent of, if not lighter than Bonny Light, so it's in high demand. Our gas, which is the largest part of our resources, is very wet. We have a lot of condensate, natural gas liquids, and LPG. So it's a light crude, and it's one that actually trades in most cases at a premium to Brent.
So is Trafigura, who you mentioned there, are they the off-taker for 100%? Do you need to worry about your end your terminal market, or is that their problem? And indeed, what is the terminal market for your product?
That's their problem. Essentially, we sell all our production typically to one trader. It makes the lifting cycle far more manageable. I mean, they have a host of buyers they sell to, refineries and co. So we don't worry about that. We just agree a pricing mechanism for them, and they come intermittently to lift the crude. So the whole market or the end user of our crude is something that we outsource to the trader.
We've all seen the gyrations in the oil market in recent weeks, certainly. How do you see it, and how affected are you by those sort of gyrations and that sort of volatility?
I mean, I did a couple of interviews during the height of the COVID crisis, and I said it's a blip. Brent today is trading at $40. And we all look, when we plan our projects, we look at the forward curve, which is a better indication of where oil prices are going. And the forward curve is looking the mid-40s, early 50s. So, and don't forget that our next lot of production will come on stream about 12 months from now. So it's the forward curve that is the definitive benchmark for oil prices when we go into production, and not going to increase production sometime next year. So we're not too worried about Brent, and it's pretty good now. I think it's stabilized at 40, and it's likely to increase as the COVID lockdowns are relieved.
A number of commentators have made the observation that under the COVID lockdowns, this is a remarkable opportunity for the world, if you like, because of the reduction in energy demand and in energy consumption during that period. This is a, I suppose, once in a generation opportunity for the world to take a major step in terms of decarbonizing their energy base. Is that something which could affect demand for your product?
I always liken oil to the blood system in the human body. As much as we try to find new ways of energizing the world, the use of oil, which is a very, very cheap resource, is likely to be with us for a long time. I read the statistics in The Economist about 6 months ago, where they said that we will need to invest the equivalent of $600 billion a year over a 10-year period just to get world energy needs to about 30% of non-fossil fuels. So whilst we are all mindful of the planet and we all hope for a greener tomorrow, we must confront the reality, which is that fossil fuels are cheap and they would serve as a primary source of energy for the foreseeable future. But that is not to say that we're not concerned about that. And I said earlier, our asset is primarily gassy. So we're going to see a transition as people move away from crude oil over the next, say, 15, 20 years. And there'll be an increase in demand for gas, which is where we are in our market as well. So whilst we hope for the best, we think it's a bit naive to think that overnight, the world could transition from a very cheap source of energy into a more expensive one in the short term. Although we are all hopeful that agenda will be achieved in future generations.
And what is the attitude towards oil from sort of local Nigerians? I'm thinking those particularly, I suppose, more onshore than offshore, but in the delta there have at various points in the past that there has been opposition to the oil industry generally. What is the feeling at the moment of those people towards the industry?
First and foremost, our oil field is nowhere in the delta. We are offshore Lagos, more near the Benin margin, which is near Ghana and Togo. So we're not in the delta. So we're not exposed to the socio-political issues that have hindered some development in delta. But essentially, it's a socio-economic problem. And it's a demand by the indigenes for oil companies and the national government to invest more in local infrastructure. So it's not as if they don't want the nation to produce oil. They want more equitable distribution in the oil wealth. But like I said before, it's not something that affects us, considering the region we are in. And we're the first time Nigeria has produced oil outside Niger Delta. So we are innovative and, if you like, champions of a new oil province in Nigeria.
And what about the situation with regard to the lockdowns in Nigeria at the moment? Can you just tell us how Nigeria is coping with the coronavirus and how it might affect your plans going forward?
Most of our energy or crude oil is exported anyway. So we're not really exposed to the domestic market. Now, in terms of the COVID crisis, there has been a temporary lockdown. They're slowly opening up the economy, but the issue of local demand is not something that affects our economics. Even though we're mindful of the issues, and most of our production is done offshore on an FPSO, which is like a ship moored 30 kilometers away from the coastline. So, and we chop in our management teams in and out. So we're not really affected operationally, and we're not affected in terms of our markets.
What about internally? I mean, I'm sure that you have a shift system for getting your workers deployed out to the rigs and then back to land again, and also management having to come out and access the assets. Has that at all been affected by the coronavirus?
Not really. I mean, we have helicopters that shuttle staff from the vessel back on shore. We have a COVID testing system. We test them regularly on the vessel. We test the crew before they get on the vessel. So we've had no incident at all. And we don't expect any in the foreseeable future because it's a very well structured testing regime that we effect.
So in terms of milestones, what are the next milestones that investors need to look for? And where would you hope the company would be in, let's say, 3 years' time?
Oh, we're very ambitious. Right now, I can't be too specific, as you imagine. We have transactions that we've matured, that in time the market will become aware of. We have major cost restructuring going on the asset level. In terms of what will be in 3 years' time, we hope to be a company that will be producing significantly more than we have today. We hope that our resource base will be better valued. Right now we're valued at 20-30p per barrel of oil equivalent 2p, which is a gross understatement considering that offshore oil is worth 10, 20 times much more. So we are hopeful that the market will come to understand the new management team, come to have more faith and confidence in us, and that our share price would mirror that renewed confidence and expansion in our production and operating base.
Also, we wish you the very best of luck, ladies and gentlemen. That was Osa Okhomina, Chief Executive of ADM Energy. You could have bought ADM shares at just shy of tuppence. In April, they're about 2.5 pence now. So, as the Americans say, you do the math. I'm afraid that's all we've got time for. On this occasion, on Share Talk, I'm Charlie Gibson, signing off. We'll be hoping to bring you more such investment opportunities in the very near future. Until then, you have a very capital day.
Thank you for listening. Remember to visit our website for more news and other podcasts at www.share-talk.com.